Your tax return is the only place that you want to be poor. Everybody else, to banks, to friends, to lenders, all this, you want to make a lot of money, but your tax return is the only place you want to be poor. You can achieve this in real estate. Even if you don't buy any more properties this year, you can still make incremental adjustments for your financial picture. Why? Because you can learn how to save money on taxes. That's the easiest way to make the next $10,000 in real estate, literally tomorrow. So today I'm going to talk about my 3-step framework to changing your belief patterns and crushing your goals. We're also going to talk about how real estate investors can pay little to nothing in taxes to the IRS, because it's not about just making the money, it's about keeping it, right? And using it and fueling it for other investments. So we're going to talk about 3-step framework and how to pay little to nothing in taxes to the IRS. So just to kind of level set and give you a little bit more background, before I kind of got in the corporate space, I knew addition, subtraction, multiplication, division. And if you go to school, they say that a 5th grader should know that. A 4th grader should know that. But that's all you actually need in real estate. Like, all it is addition, subtraction, multiplication, division if you want to be a real estate investor. And so I have this picture here because that was the first job that I had, like first legal job. I posted a story on my Facebook, and if you guys know who Avery Carl is, she messaged me. She's like, "So what was your illegal job that you had?" But that was my first legal job, was pushing carts for $7.25 an hour in Chicago winters. Another job that I had was Lou Malnati's Pizza. Has anybody ever been to Chicago? Lou Malnati's? Yeah. So it's amazing. Chicago pizza is the best. There was a guy that worked there. He was the chef. And one time I was talking to him, I go, this guy Mike, Lou Malnati's opened up in the late 80s. He was cooking pizzas for 25 years. And I asked him, I said, what's the number one thing to make a good pizza? And he goes, Ryan, you could be the best chef in the world, but if you don't have the right ingredients, it ain't gonna work. But the best chef in the world knows which ingredients are rotten. And that's the same thing with investing. Like, you have to know the numbers, you have to understand the numbers in order to make a decision. And the first accounting firm job that I had was when I was 18 years old. I was working at a CPA firm right by my school. And one day I was doing these tax returns, and I had a tax return, a married couple. They were making $200,000 as a W-2. And then there was another guy who I actually know now and met, but he had $400,000 of cash flow coming from 18 apartments in Chicago. And when I was putting the tax return together, he paid less in taxes than the married couple. So he was double their income, and he was single, which if you're single, you pay more in taxes because the government incentivizes homesteading. And I asked my boss, I said, hey, did I do this right? Am I about to get fired? He goes, how is this guy paying less in taxes? He goes, it's because he invests in real estate, right? And that was it. That was the light bulb moment. That's all that I needed to know to kind of do what I do now. So I got my first job at Deloitte, and it's a corporate accounting firm, big CPA firm. I went to a small Christian college, and that girl to the right of me in that picture, she also went to my school. Now, we had 400 kids in my college, and she was a valedictorian, and I was not. So she was like 1 out of 400. I was like 200 out of 400. But I started my career at Deloitte. I bought my first house with only $2,500 out of my own money, out of my own pocket. I'll show you in a second. But at Deloitte, I realized that I was helping people who were already rich and wealthy become even more rich and wealthy. And I decided that I wanted to help not the everyday person, but the person in their family that wants to change their family tree. And that's every single person in this room right now. You're here to change your family tree. So it wasn't always this way. Like, I went on to do big things, but this is the first house that I bought. I lived in the bottom, I rented out the top. There's these ugly stairs, because most multifamily properties, you have to have 2 entrances and exits, like fire code and stuff. Cut those trees down, but this property taught me everything, not everything, but this property got me in the game. And a lot of times people think that their first deal or the first couple of deals need to be home runs, when really they just need to be base hits, right? I got on base. I bought this house with only $2,500 out of my own pocket, and I learned the game. Like, I learned how to rehab, I learned how to fix things up, and that's how I got started. So the first time I've ever done public speaking, this was at, if you guys know who Bill Faith was, this was at his, he used to do these boot camps. And I was still working at Deloitte at the time, so I put a PTO in, and I went to go speak. And so this is the first time that I ever did public speaking, was in front of 100 people when I was 22. And I always get a little nervous. But that was the first time I ever did public speaking. And after Deloitte, now what I do, I invest in over 10 different deals. So I do RV parks, campgrounds, hotels. I spend more time with my wife and family because of business and investing and learning tax strategy. And now, really, I'm able to motivate and inspire people every single day, which is what I love to do, is motivate, inspire, influence people. Now, this was the first time that I was on a big stage, and if you can see closely, I have a water bottle in the back of my pocket, because I was so nervous before getting up there, and it was in my pocket the entire time in front of 800 people. How many people were at that conference? Anybody remember? Yeah, you guys remember. And so that was the first time I got up on stage, a big stage, and did speaking. This is my social media guy, Peter. So he's been with me since literally day one, like 2020, 2019. I started doing Reels, videos, and stuff. And he's been with me since day one, and we were backstage. This was backstage at the last event in February. 2,000 people were at that conference. It was fun. And you can't really see it, but you could see somebody's head peeking there. And I was backstage, and that was Pace Morby. And he comes up to me, he's like, "Hey, Ryan, you're going to crush it. Like, you're going to do an awesome job." And I didn't even know Pace knew my name. But there I was, speaking in front of 2,000 people, got to meet Pace. So Tax Strategy 365, a little bit about my firm and what we do is most investors, most people wait until April to figure out how much money they're going to owe in taxes. And what you really need to be doing is thinking, and I don't want to say this, but you really need to be thinking about taxes like every single day. Like if you're going to make a business decision, an investment decision, you have to be thinking about what is the tax ramification. Because if you live in California and you have a high W-2, you're giving like 50% of your money away to the government if you don't understand how to save money in taxes. So kind of who we work with a little bit. Nowadays, we're working with real estate investors with at least 3 properties. They're going to use their high income to fuel their investing. Sometimes people feel anxious, stressed, confused when it comes to taxes, and we help them understand taxes so they can understand their life and their business a little bit better. $10 versus $50. There's studies that show that the emotional toll of losing $10 is more than gaining $50. Put it in terms, if you were to lose $10 out of your pocket right now, you would have to find $50 in order to level set the pain of losing $10, okay? And I found this out a couple months ago, but it actually happened to me when I was at Deloitte, because when you get your CPA license, they give you a bonus. They dangle a carrot. So they gave me a $5,000 bonus for getting my CPA license, but they said, you have to stay for 2 years. So if you stayed 1 year, you got the $2,500, you got to keep that. If you didn't stay 2 years, you had to give back the $2,500. And I remember the pain and just the thought process of, man, I really don't want to give back the $2,500. I was 18 months out of the 24 months that I needed to stay there, and I said, I really don't want to give the $2,500 back. But I quit anyway, and they took the $2,500 back from me. And I went on the next 6 months to make over $100,000 my first 6 months in business for myself. And I almost let that $2,500 that I had to pay back be the barrier to that, because if I would have stayed, what would have happened? They would have given me a raise, they would have given me another bonus, they would have done this. I almost let $2,500 stop me from having over a $2 million net worth. That was this, I remember that. So think about this, right? The pain of losing something is so much greater. A lot of people don't understand this. It's like, what is the risk of not taking action? right? Because if I did nothing and I kept the $2,500, I probably wouldn't be on this stage right now. I would be still working at Deloitte. So think about that, $10 versus $50. So the 3-step framework that I use is, number 1, the conscious mind, which created the problem, cannot be the one to solve it, okay? And Albert Einstein said this. And he goes, whatever problem you're facing in your business, in your life, that's because you walked in with a certain mindset or a certain plan or some sort of strategy, and it didn't work, or it's not working right now, and you need to fix it. Well, a lot of people will try a plan 100 different times, right? I'm doing this, I did this course, I bought this thing, it didn't work. They'll do it 100 times before they realize, were you really on the right plan to begin with, okay? And so that first step is changing the conscious mind so that you can solve the problem. So what is the mindset shift that you have to make in order to solve that problem that you have? Because the problem is there because of your mindset originally. So a lot of investors experience this. They're overpaying on taxes each year. They don't find out what they owe until April. Who hasn't filed their 2023 tax returns yet? Okay, we'll see me out there in the booth. But you don't find out what you owe until April, and your real estate portfolio and your business profits are suffering. And especially if you are trying to buy more deals, because you need tax returns to show to banks that you are qualified. And the funniest thing about tax returns is your tax return is the only place that you want to be poor. To everybody else, to banks, to friends, to lenders, all this, you want to make a lot of money, but your tax return is the only place you want to be poor. And it's so funny because you can achieve this in real estate. Like you can make, we have clients 300, 400, 500K of income, but they're only paying taxes on 100. But the best thing is they get to show the bank, and the bank adds all that income back because it's not actual expenses. They're fictitious losses, let's say. So items most commonly missed, so check this out. Go check out your recent tax return and make sure that you have property insurance deducted, your property taxes, and this one called depreciation. And some of the missed tax strategies that we see where investors, it's because it's not an action problem, it's an education problem. Most investors don't know what they need to do in order to save money on taxes. And the crazy thing is you're already doing what you're going to do. You're buying businesses, running businesses, doing real estate. You just need to know the strategy to help you save money in taxes. And this creates bankability and lending problems. So how many people are self-employed? Isn't it hard to get a loan from a bank with you need 2 years of income, all this and that? I wish somebody would solve that problem for us. But it can create banking and lending problems if you have tax problems. So a lot of times when you get a loan, the bank wants to make sure that you don't have any federal tax debt. So that's why you got to file your 2023 tax return before you can get another loan or whatever the case may be. So kind of how we do it. So anytime we onboard a new client, we'll review their prior year tax returns. New clients will fill out a net worth statement. So kind of changing that mindset. I'll get into this in a little bit. And then we just do an onboarding call to discuss their goals, right? So let's see what we got here. Even if you don't buy any more properties this year, you can still make incremental adjustments for your financial picture. Why? Because you can learn how to save money on taxes. That's the easiest way to make the next $10,000 in real estate, literally tomorrow, is just learning how you can pay less in taxes. So even if you don't buy any more properties this year, you can still save money on taxes, I promise you. The average investor that we work with saves $24,000 in taxes. That's just the average investor. This is the best starting point. Boosting your net worth simply by understanding the tax strategies that you have available to you, like what's already there. So the conscious mind which created the problem cannot be the one to solve it. So this just applies to business, life, everything. Whatever problem you're facing, it's because the mindset that you kind of walked into it was wrong. And you might have tried the same plan 100 times and failed, but were you really on the right plan? And the people that succeed in life are, I don't want to work with somebody that succeeds on the first try. They might have got lucky. I want to work with somebody who never gives up. I want to work with the person that 5 or 6 times they try to do something, they need to fix it, get on a different plan. And I don't want to work with the person that succeeds the first time every time, right? The conscious mind which created the problem cannot be the one to solve it. So the second step, or the second framework that I teach is make better decisions with the help of Sherpas or guides. Does anybody know what a Sherpa is? Has anybody heard that term before? Okay, a couple. So Sherpas are the people, let's see. Sherpas are the people that live in the Mount Everest area. And those are the people, the locals, that will help you climb Mount Everest. Now, there's 100 ways to climb the top of Mount Everest. But do you know the number one common thing that everybody that's climbed Mount Everest has? A Sherpa, a guide. Somebody that's already been there before, that's literally already climbed the mountain. They know which crack to not step on. You know, in other terms, they've already gone through the woods. They've already forged the path. They got the arrows in their back to show for it, and then they can help you. So who can help you, right? Whether it's help save money on taxes, help you in your business. Like Sherpas, we'll call them Sherpas or guides, are the quickest way from where you're at now to where you want to be is by finding a Sherpa. Well, you might ask, what makes a good Sherpa or a good guide? Does anybody recognize this picture? Anybody know the movie? Catch me if you can. So this is actually one of my favorite movies, and it's like young Leonardo DiCaprio. So this movie is about a guy back in like the 50s and 60s who faked being everything. He faked a doctor, lawyer, pilot, dentist, everything. And it's based on a true story of this guy that actually did this. His name was Frank Abagnale. He went to prison, and now he speaks, I guess. I don't know. And in the movie, the federal agent catches Leonardo DiCaprio, who's the guy that faked being everything. And in the movie, when he catches Leonardo DiCaprio, he goes, hey man, out of all the things that you did, you faked being a doctor, a pilot, lawyer, the most impressive thing to me was, how did you teach an entire semester in sociology at BYU without having any, how did you fake being a college professor? And in the movie, he responds back and he goes, I didn't have to know the entire semester. I just had to be one chapter ahead of the students of that person. So a good coach or a good mentor, if let's say you're here and your mentor is here, you want to find somebody that can speak one chapter ahead, solve that problem that you're facing now, and then help guide you up. Because a good coach or a good mentor is going to meet you where they're at, okay? And they should just be one chapter ahead of you. So he didn't have to know the entire semester of education. He just had to be one chapter ahead of the person that he was trying to help or teach. So Audrey's an example of a client of ours who what's interesting about her is she bought her first property in 2022. So she's making $180,000 as a W-2. She bought a $600,000 property in Orlando, and she saved $33,000 in taxes by buying the property in Orlando. And I remember helping her kind of throughout the process, like, here's a contract. Those kind of closing costs seem a little high. Is it in a good market? Let's check that out. But Audrey was able to save $33,000 in taxes through the help of a guide, through us, right? Because we met Audrey where she was at. We were just one chapter ahead, and whatever step of the way, because you want to have that guide or that Sherpa that's just one step ahead of the way. So what's interesting about her is most investors, when they get tax savings, they get a tax refund in April, right? So you basically, all a tax refund is you gave the government too much money, and they're giving it back to you on April 15th or whenever you file your tax return. But when you do proactive planning, you can plan ahead to know, hey, that's my money, and I need it now. You ever see those, what are those, the lawyer commercials? J.G. Wentworth, 877, cashing out. Instead of getting a $33,000 refund, what can she do? If she knows she's going to save $33,000 in taxes, she can go to her employer and tell them to stop withholding taxes from her paycheck. So that $33,000, instead of getting it in April, she was able to get it from June through the end of December, which that gave her an extra $4 or $5K a month in cash flow because she wasn't paying those taxes anymore. And that helped her fund renovations, pay off some high interest debt. And so it's not about just saving money in taxes, but planning ahead for that. Because if the government owes me $33,000, why would I take that in April? I want that right now. So Jenny's another client of ours, an example. So Jenny's a very successful business owner, med spas, daycares, short-term rentals, and her CPA before didn't know that you can use your rental losses to offset business income. And so we kind of went into her tax returns, looked at them, actually amended her tax returns, and got her a $90,000 tax refund the first time. And that was 1 year. And that was just 1 year that somebody who was working with the wrong CPA, they were working with the wrong Sherpa, the wrong guide. Because that person's just going to take the numbers, punch it in the software, spit out her tax return, and tell her that she owes all this money. What we like to do is help people understand, like, what are some of the ways that you can save money in taxes? Trevor's another example. He is a realtor in Phoenix, actually, Scottsdale area. $432,000 business income. He bought $652,000 of property, and he saved $39,000 a year in taxes. So anybody can save money in taxes. If you're a W-2 professional buying real estate, if you're a business owner. We like working with business owners because they have more flexibility. I don't have my phone on me, but I always use this example of, like, I run 3 businesses from my phone, right? I'm always on that thing. And how do we take what we're already doing in our lives and our businesses and make that tax deductible, right? Because it's so easy to do that, especially if you're a business owner. So here's a little bit about what you can expect by learning the tax code. You'll know what you owe well before the end of the year. Before the end of the year is even over, then you don't have to stress about how much money am I going to owe, right? You'll know all the strategies that you can take and when to take them. This is an important thing. When it comes to tax, timing is everything. So when you sell properties, when you retire, anything that happens, tax is the most important part. So let me give you an example. So my dad's an electrician, or he was an electrician. My dad worked for 40 years at the same company. He worked at ComEd, which is an electric company. He worked 40 years at the same company all his life. And he retired this year, and he goes, "Hey, Ryan, I've been kind of listening to that Dave Ramsey thing. I think I want to pay off my house." I said, "Okay, great, Dad. Where are you going to get the money?" He goes, "Oh, I'm going to cash out my 401k. And I go, "Not this year," because he's working a high W-2, and then he goes to cash out his 401k. So what happens? He's already in a high tax bracket, right? So he doesn't want to cash out his 401k this year because he'll pay more in taxes. So I told my dad, I said, "You're going to wait until January 1st of 2025 when you have no W-2 anymore and you're just living on pension." So something like that, literally simple as timing, can save somebody 5 figures or more in taxes each year. So what does this mean, right? Identify what you're already doing and how do we make it more tax efficient. You're already running businesses. You're already setting up these short-term rentals. You're already doing what you need to do to save money on taxes. But how do we make it more efficient? Here's the problem. Most CPAs don't understand what to do with real estate. Most people's CPAs don't own real estate. And when you work with somebody that doesn't own real estate, they don't know what you don't know. They don't know to tell you, "Hey, I got your profit and loss statement for that property in Gatlinburg, and I know something about the Smoky Mountains because you guys have bugs and bears. So I know you're paying money for pest control. Where is it at? I don't see it on your tax return. I don't see it in your financial statement." So working with a CPA that knows and understands real estate or your business will help you save money in taxes because, again, I know that in the Smokies, there's a lot of bugs and there's a lot of bears. But most CPAs don't know that. It's surprising. And this isn't your fault. You didn't learn this in school. And actually, that's another subject. Does anybody know who founded the Board of Education? Rockefeller founded the Board of Education. So you might think like, "Hey, this guy, he owns factories, he employs workers, like oil and gas, whatever he does. Why would this guy want to educate more people? Doesn't he want people to work for him?" And when somebody asks him that question, he goes, "I'm not here to create a nation of thinkers. I'm here to create a nation of workers." And that's why, that's where the school bell actually came from. So the reason why they have school bells in the morning, or like at recess to bring everybody back in and say, "Now it's time for school," is because they're indoctrinating you to show up to work and come back to work, ringing that bell. So that's what Rockefeller did. He funded the Board of Education, and he pretty much created a nation of workers, not a nation of thinkers. And so every single person in this room, we're thinkers. We're not workers. We shouldn't be. Most real estate investors wait until April to worry about their tax bill. That's just how it is. It's timing. Most real estate investors don't know they have a problem until the problem smacks them in the face, right? Everyone thinks that hiring a CPA to prepare your tax return will get you your best savings. That's false. Because if they're just preparing your return, they don't know as much about you, they don't know about your business, they may not know where you're invested at, and they can't proactively help you plan ahead to save money in taxes. The reality is, they're just preparing your return, and they're not doing the necessary planning that will actually save you money. They're not being that Sherpa, that guide. They're not thinking one step ahead of how you can actually save money on your tax return. So make better decisions with the help of Sherpas and guides. And that's not just tax related. That is anything in life. There is somebody who has already done it. They've already been there. They've already gone through the woods, forged the path. They got the arrows in their back to show for it. Find that person who can be that guide that can help you get to where you need to be. And again, remember, the best Sherpa can coach you one chapter ahead, one step at a time. Less is more, addition by subtraction. This is the third step. So a lot of investors, a lot of people think that in order to succeed or grow their portfolio or to build more wealth, they need to add more complexity to what they're already doing. They need to buy more properties, work more hours, hire more people, this and that. Less is more, addition by subtraction. Because if you can remove what's not working and focus on what is working, addition by subtraction. A lot of investors think, how do I scale? Sometimes you might have, let's say you bought 3 or 4 properties and you have a lot of equity in some properties. You want to take those, maybe you want to slow down a little bit. Maybe instead of having 4 properties, you want to manage only 2. So less is more, addition by subtraction. Does anybody know what that is? Statue of David. So Michelangelo, the ancient sculptor, when he built that or constructed that, he didn't add more to the slab of marble. When they brought the slab of marble out and he started chiseling on it, he didn't add more to the slab of marble. He said, "What can I take away from it? What can I chisel away?" And that's what became the Statue of David. So what in your life and your business can you subtract from, take away, that's going to amplify and get you those results that you need? So the best example of this, let me go back. The best example of this is you might have, let's say, 5 properties. Some of them are paid off, some of them are not. And you might think, hey, in order to make more money, I might need to buy more property, right? Or maybe some of those have high interest. Maybe it's 7-8% interest loan, and you take money from one of the properties and you pay off the debt of the other property. So a lot of people think in order to scale, they need to buy more, they need to add more. But sometimes less is more. So cash on equity audit. Has anybody ever heard this term? Or me throw this term out? Okay. So cash on equity audit, I started talking about this in early 2022. What happens is a lot of investors, especially the investors that bought in 2019, 2020, all the properties have gone up in value, and they have a lot of equity in those. And you need to determine if your equity is working hard enough for you. Because in order to get out of your W-2 or in order to work less, you really need your money, your net worth, to work hard for you, okay? So I've seen examples where somebody's got $300,000 of equity in a property, but it's only making them $5,000 in cash flow a year. So I should be good at math, but let's see, 20. It would take them 60 years of renting that property out, 5 times 6, 300. It would take them 60 years of renting that long-term rental out just to make back what they could sell it for and buy something else, right? So if you're not doing a cash on equity audit of your portfolio, That's where you're going to list out all your assets. You're going to take your, when did you buy it? What interest rate you got on it? What's the address? How much is it worth now? How much are you making on the property? And then you're going to determine if it's worth keeping it, okay? Now, here's where a lot of investors kind of get confused or like a little murky, is a lot of people go, oh, Ryan, does this mean that I bought a bad deal? I said, no, you bought an awesome deal, but is it still a good deal for you now? Because sometimes people buy properties and they skyrocket in value and it's not worth holding on, and instead they should sell it they should sell it or sometimes borrow against it to go buy more property. So Ross and Jen, actually, I had lunch. They were supposed to be here. I had lunch with them yesterday, and they're a perfect example of this because they had a long-term rental with a lot of equity in it, and they sold the long-term rental because it was very similar numbers, $300,000 of equity in a property, only making $5K a year in cash flow, and they took that and they went out and bought 3 more properties using those funds, right? So a lot of people, and I had this mindset as well, a lot of people are buy and hold, and traditionally, that's what wealthy people do. They actually really never sell anything. They just buy and hold forever. But you have to know, kind of going back to that, you have to know when's the right time to sell a property. A lot of times in like entrepreneurship or any time in life, sometimes you just have to know when the tide is going up and when the tide's coming back. And so sometimes you can catch a wave where you might buy a property and then it goes up a ton in value and it's actually not worth keeping it. You should divest and go invest somewhere else or scale and do something bigger. What's interesting about them is they bought 3 more properties since they started working with me, and they pay less in taxes now with 5 properties than when they had 2. And the simple mind maybe not comprehend that because it's like, hey, they're buying more properties, they're making more money, but that's because they invest in real estate. And that's what my old boss, Jim, told me. He goes, it's because they invest in real estate, right? So you can buy more property, you can save more money in taxes, and just achieve financial freedom. But how will I know that tax strategy can work for me? The tax code is written for everyone. The only people who get special benefits from it are the ones who understand how to play the game. It's like playing a board game for the first time. You don't know how to play, but somebody that plays has played before. Has anybody ever played Rummy Cube or Rummy? I love that game. And my grandma taught me how to play Rummy Cube for the first time, and I absolutely love the game, but I didn't know how to play. I did not know how to play when I started. And a lot of the real estate investors don't know what to do to save money on taxes. And then it goes back to they need the guide, they need the Sherpa. Here's what it takes to make a good tax plan. Background. What's your specific situation and what are your goals? Because if I don't know the problem, if I don't know what problem you're trying to solve, I want to get out of my W-2 job. Okay. Hey, I want to pay less in taxes. Okay, great, everyone does. Why? So I have more money. Why? So I have more time freedom. Why? So I can spend more time with my son, right? So it's not just about saving money in taxes, but it's understanding the why before the why of why do you want to be in this business? Like, why do you want to be doing short-term rentals? We have to understand your background. The strategy and implementation part is we'll put together a plan, and we'll take action on the plan. And we also do something we call quality control. So I actually do weekly office hours with everybody that are clients. And you can come in there and you can ask questions. And so quality control, because we don't want to make sure we miss anything, right? Like, I cannot tell you how many people, just like my dad, make that mistake. People that retire, let's say they retire later in the year, then they go cash 401ks out, and they pay way too much in taxes than they need to. And that's why you want to do quality control. So before the end of the year is over, you want to talk to a CPA or you want to talk to your tax professional to make sure that you're not going to pay more than you need to. So how we pull it off? We gather all information from you. We get on a one-on-one call to discuss the debrief, a follow-up call, and we hold your hand for 365 days. And that's why my company is called Tax Strategy 365. So this is what it takes if you're looking to hire a CPA, like not even a CPA, but if you want to find somebody that can help you get to where you need to be, they need to be doing these things, and they need to be one chapter ahead. So a lot of people in life, they have three options. Do absolutely nothing, and nothing changes, right? So you can sit there and you can look at your problem, and you don't do anything to solve it, and absolutely nothing changes. Some people, they try to do it alone, or they try to do it by themselves. They don't use the right guide. They don't use the right coach. And that can be tricky too, because you kind of get in this state of paralysis analysis. Everybody's been there before. You almost know too much for your own good. One of my mentors, he flips about 15 homes a month. And he's been doing that since he's like 26. And I asked him, I was talking to him, I was like, hey, did it ever scare you to flip that many homes? He goes, well, part of the reason I'm successful is I didn't know that a 25-year-old shouldn't be flipping 15 homes a month. I just went and did it. And so if you try to do it alone by yourself or use Google, now we have Google. I mean, Google, YouTube, but have a guide. Let us help you. And I want to leave you guys with this. So I got a buddy, he's a pilot, and I asked him about like flying school and all that, and he goes, he's talking to me about flying, and I learned that you can learn a lot of life lessons by taking flying lessons, because a airplane needs to be going about 140 miles an hour in order for it to take off, or it crashes and burns into whatever is in front of it, okay? So they call that the point of no return, right? Because when you're flying that airplane on the runway, you get to the point where you either need to take off and go and fly, or you're going to crash into whatever's there. But I don't call it the point of no return. I think of it as the point of no return or the point of no rewards. Because a lot of people, they don't hit the point of no return because they creep forward in life. They take small steps at a time to try to solve their problem or get the solution, and they just inch up to that takeoff point. But there's no pain with failing. So people creep up to that point of no return. They're not going fast enough. They were never going to take off anyway. And that's how a lot of people live their life. They will inch forward, they'll creep forward to that goal, and they'll never take off. So at some point, you have to decide if we're going to fly this plane or not, or I'm going to crash into a wall. But most people, they never hit the point of no return because they're going too slow to get there, right? So that would have been me if I was at Deloitte and I took, let's say I took that $2,500, I didn't want to pay the $2,500 back. I would have creeped forward with my goals, but instead, I took off like an airplane. And so a lot of people, they really don't have a point of no return because they were going too slow in the first place. And so in order to take off, you have to ramp up, you have to get to 140, and you have to decide, we're taking off right now, instead of crashing and burning into the wall.